In today's video, we are doing a deep and detailed analysis for Bitcoin on the short term and the higher time frame. By the end of today's video, you have a detailed understanding of exactly what is happening, the key levels you should be watching, and a plan to execute no matter what occurs. We'll also be jumping over the total market cap and the altcoin market cap in today's video. Let's jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. In today's video, we are taking a look at the recent rejection from the critical horizontal level at 102,000. We're discussing the key levels you need to be paying attention to for Bitcoin moving into the weekend and beyond, the probability of a new all-time high, the macro charts, the recent PPI data release, and of course the altcoin market cap and total market cap. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll join a channel with over 7,000 members. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, you can join us in VIP, where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chat and education chat, our daily video chat, our help, our news, and our trade setup chat. Again, that is with over 700 members, and you can join the VIP channel by clicking the pinned comment in the free channel by clicking my name, clicking the first link to find our entire trading track record spanning back 50 plus months, and of course a 10 plus minute video showing you inside the VIP channel and exactly what you'll get access to. Check it out. And let's dive on in. So as we can see, over the past 24 hours, we have seen a pretty aggressive 4-hour rejection from that $102,000 level. Now, we discussed in yesterday's video that the $102,000 level was essentially that key and most likely last level of horizontal resistance, which Bitcoin will need to break above before we move to a probable new all-time high. We have seen now a rejection from that level following liquidity being grabbed above the 102,000 level as a consequence of the producer price index coming out slightly hotter than the market anticipated. We'll discuss what that means in just a moment. So we have seen that short-term pullback here, but we are very much still within that range between that $99,000 POC level of support, and again, that horizontal region we established over the course of the last 2 weeks, and now that $102,000 resistance. Between a pretty critical support and a pretty critical resistance. We're discussing that in today's video. Moving over to the overall data here, the 24-hour volume is up 8% at 266 billion, and liquidations are up 24% at 312 million. Very high for liquidations still, considering there has not been much movement for Bitcoin in the last 24 hours, with 189 million coming from longs and 122 million coming from short positions. Moving over to the economic news, we can see we have just had the PPI, so producer price index, month on month come out. Now, producer price index is essentially the cost of producing items for manufacturers, and generally when we do see those costs increase, those costs usually along the line get pushed down to consumers. So we do eventually see CPI increase, so it is a leading indicator for CPI. Now, we did see a pretty large jump, with consensus being at 0.2% and the actual result being 0.4%. And as we mentioned in our prior video, the market is still hypersensitive to any results that are going to potentially indicate inflation is rising, even if the cause of the rising inflation is not a consequence of anything that has negative long-term effects on the market. For example, reducing interest rates are generally considered to be bullish for risk assets on the macro, as the cost of debt decreases, which facilitates more which facilitates more spending in the economy, but most importantly, allows companies to acquire debt for cheaper, and they put that money into the asset market, which generates income, which increases their cash flow, and et cetera, et cetera, et cetera. So when we see producer price index increase by 0.2, this is not necessarily a bad thing, but the market is emotional, and the market sometimes is future seeing, so they see that as a potential leading indicator that inflation is rising, and since the market is hypersensitive to inflation rising, they are going to perceive that as short-term bearish, as again, the market moves on perceived systematic risk, so not actually what the risk is, but what the risk is perceived to be is how the market adjusts and moves. So that is why we had seen a short-term correction for Bitcoin. If we look at the stock market as well, we have seen the S&P 500 actually drop down about $30, $40 as a consequence of that news release as well. Moving over to the DXY, we have as well seen the DXY push up slightly, again as a consequence of the PPI rising. So DXY, not too much change, still under resistance, not much to discuss over here. Watching this horizontal level closely, still looking like we are looking for a correction lower, provided this level holds this deviation and we do not clear this high again. If we come up and clear this weak high, that is going to invalidate this as deviation and we will likely see a continuation. But until the price action clears that high, the expected trajectory of price action is essentially going to be developing into a downtrend. This will take many months to play out. Moving to the S&P 500, holding the weekly high is ideal. That is what we're watching for. We are moving into the Christmas, December, New Year's, holiday season, and generally assets don't perform amazing over those periods. So we are moving into an area of a little bit more skepticism over here. We are cautiously optimistic on the macro, provided our 6,000 level, our 5,700 is able to hold. Again, if we drop below 5,700, that is going to be our bearish trigger. Until that happens, we are macro bullish, but we'll become short-term bearish if $6,000 breaks toward the downside. That is it, guys. Let's jump into Bitcoin. Before we do, if you were interested in supporting me making this content, and most importantly, supporting yourself in your trading, join the links down below to BitGet, BitUnix, or BingX. Again, by signing up, you'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll support the channel and support yourself. Sign up to the exchanges down below. It takes a minute and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and get stuck into it. I'm going to keep today's video nice and short and sharp because although we have a lot to discuss, and there always is with Bitcoin, there hasn't been too many short-term developments, or at least higher time frame influential developments that we need to go over today. So let's just start on the current price action, the key levels, what is expected, and what we are watching for, and then we'll move over to our macro charts and the altcoin market. So taking a look at Bitcoin again, we are very much in a similar position as we were yesterday. The only thing that has really developed since then, as we mentioned, was that we saw a liquidity grab over 102,000, which has done two things. Number one, it is validated this level as a level of major significance. It is now going to be acting as a bullish trigger point. And number two, it has forced a downward flush for the price action, which could potentially move toward our lower point of support at 99,000. So again, that comes back to the two key levels we are watching, the 102,000 and the 99,000. The 99,000 being a combination of our POC, the point of control, essentially. The point of control is the largest peak on the volume profile. This is our visible range volume profile. The visible range volume profile is essentially looking at the visible range. So visible range, the entirety of the price action within our visible range, and volume profile, essentially the amount of volume traded on a horizontal basis, which again is represented now on the horizontal plane. So this tells us at this point, the 99,000 has the point of the most historical trading volume on this visible range, which is a critical area of support for us to hold. We can also see we have got our major uptrend. This is going to be our 4-hourly uptrend, which has originated since the 11th of November. We have passed through and retested this a numerous amount of times with many liquidity grabs below this region. This region on the prior retest lined up perfectly with our $94,000 support, which was a prior period of support, which we held between the dates of 27th to the 4th of December before we saw the rally to 104,000, which formed the basis of the lowermost part of the horizontal consolidation we had prior to the aggressive rally to $104,000. This again is an area of major support, and as we can see, this 4-hourly uptrend has now crossed through this level, and therefore if we were to retest this region again, it is unlikely we will be holding this region, as we'll be retesting this point from a perspective of a downtrend rather than a uptrend. To keep the price action essentially simple, we are bullish while Bitcoin remains above this diagonal uptrend in terms of the trend. The trend is pointing upwards, and therefore it is expected that Bitcoin will continue toward the upside while it remains above this uptrend. The question is what happens when we drop below the uptrend, which makes it confusing. So let's discuss our key horizontal trigger points now. First and foremost, go very easy. We have got our 102 trigger point. The 102 trigger point has been retested 3 times now with one major liquidity flush, and again our failure to establish a continuation post change of character as a consequence of our news release. So looking at this level in the future, again we are expecting a break of this region provided our diagonal trend level holds and our POC level sustains. So provided we do not drop below these regions, we are expecting continuations. This also means if we were to drop back into these regions, this would be a perfect opportunity to look for reversals toward the upside, which could result in breakouts for these large swings upwards. We are watching for that as well. But if we are able to break above 102, whether we see the direct break or an indirect break eventually, we are expecting an all-time high for Bitcoin. We are expecting a move potentially between the $106.5 to $110,000 region for Bitcoin upon the break of 102,000. Now we do expect this move to be quite rapid. Again, we do enter this lower historical resistance range above around 103 to 104,000, a area of price discovery. And as we know, in price discovery, we have little historical data. So we don't have levels. We don't have these price levels that we have seen the market react at prior, and therefore it is more likely orders will be placed clustered around psychological points, which create these large volume gaps between those points, which facilitate aggressive candles, these aggressive volatility, these aggressively volatile candles, which essentially just gap the price action upwards in a very short manner, as we saw as a prime example over here. So that is why we're putting our targets quite broad, 106.5 to 110, because it's hard to predict exactly where we'll go, but we're going to see at least a degree of volatility above the 104 level, so 106.5 to 110 upon the 102 breakout. That is our bullish expectation. The bearish expectation is not present. We don't have a bearish expectation because essentially over the course of the last 20 days, 30 days, we have established many horizontal support levels as buffers for the price action to essentially remain bullish on the higher time frame. And by bullish on the higher time frame, I essentially mean this entire move toward the upside since this $74,000 breakout. That is what I'm meaning, okay? So when we're looking at this price action, to keep it simple, while we remain above $86,000, which is the lowest point of support within this uptrend, while we remain above here, we are expecting continuations upwards. So if we were to see a hypothetical scenario, a break to 110, a correction back down, this would still be considered high time frame bullish, and we'd be expecting continuations into 120, etc., etc. But if we were to see the price action drop below here and retest that and reject, we would then be looking for corrections towards our next areas of support. We are watching 80,000, we are watching 75,000. So until we see that loss of the prior low at 86,000, we are expecting continuations on the macro, which could span to 110, could span to 120, etc., or when a top is created for Bitcoin, okay? This is essentially the bullish, or should I say, the bearish trigger point, which is then, again, another word for our bullish or our bullish invalidation point, okay? That is going to be our bullish invalidation and our bearish trigger. So, on the uptrend, if we drop below the uptrend, we are expecting a correction into this sell side liquidity at 90,000. Again, every time we test these levels, the probability for bounces occur, but again, all these levels will likely be tested as a consequence of a break of the prior level. So what I'm trying to say is we have a hell of a lot of support below us. It is unlikely that we would see a flash correction through all of these supports. If we do start to see them move downwards, we will see it from a mile away. We have plenty of time to discuss and prepare when that occurs, and I don't really feel much need to be going into too much detail about the reactions at these levels until those levels become more of a possibility. And again, it is not so much of a possibility while this uptrend sustains and while we are sitting above 99,000, as those levels are really significant on the short term. So that is Bitcoin. To summarize it, we are bullish on Bitcoin. We're expecting continuations. For us to see the continuation upward to a new all-time high, 102 needs to be broken. For us to see a drop toward the downside, the uptrend in the POC needs to be broken. So on the short term, and this is why I said at the start of the video, I am cautiously optimistic. And I think it's a really good word to use moving into the December and holiday period. Cautiously optimistic. I'm aware of the invalidations. I'm aware of the validations. I'm aware of the potentials for upward and downward moves. And most importantly, I have a plan for those moves, and if any of those moves were to occur, I know how much significance to apply to them. I know at what point the macro trends become affected by these moves, because remember, not every downward move is bearish, not every upward move is bullish, and we are able to react accordingly, okay? And that is the most important thing, developing, having plans, and setting those plans in motion when required. So let's move over, guys, to Bitcoin dominance. Bitcoin dominance has seen a pretty sharp rejection. Good thing over here to see, we have dropped back below and we are watching one level now. Well, we're watching a few levels, but from a horizontal level, the one level we are watching is this prior sell side, okay? So this horizontal level we can see we've rejected from. We want to sustain underneath that point. We do not want to see a weekly close back above. Ideally, we do not come back up to even test that point again. Ideally, we see the price action continue immediately from here, and we do not cross that level again. If we cross that level again, it is possible that this move downwards is going to be a fake out, and we will see a continuation back upwards, okay? So we do not want to see a break back above the level. Ideally, we reject from it, we come immediately down, we lose a 50 EMA, and we keep falling. Again, as per the trend, we are in the start, okay? We are in the start of a downtrend as per momentum. We have negative momentum. We have had a momentum shift, okay? And this trend by any means, or wrong thing, this trend by all means right now is not a very volatile downtrend. It is not an aggressive downtrend. It is essentially just the beginning. It is just the beginning of a potential downtrend. So there's plenty of time for Bitcoin dominance to drop. There's plenty potential for it to drop even more. According to the charts and what we're seeing here, this is essentially just the start of that trend really beginning to reverse. So we do not want to see it fail to reverse before it really starts to kick off. Moving over to the total, we can see nothing really unexpected occurring on the total market cap. We have, of course, seen that weekly rejection, as we've discussed many times now. We've also discussed that these weekly corrections upon the breakouts of prior all-time highs are expected. It's not going to be the first, and it is definitely not going to be the last, okay? We have had 5 weeks on the total of just green candles. It is normal to see red weeks on the market, even when we are in aggressive uptrends. A lot of people get into this mindset where we're going up really quickly, and then it's just like we have to continue to go up, and the moment they see any sort of pullback, they think it's over. That is not necessarily the case. Remember, a red candle is not always bearish. A green candle is not always bullish. If you're judging whether or not the chart is bullish or bearish based on the color of a candle or the candle itself, there's a pretty ineffective way to judge the actual strength behind the price action. We need a lot more information than just that. So I never really make decisions based on a candle color or a candle itself. It's just simply confluence. So in this instance, even the candle itself it's not indicative of anything significantly bearish. And definitely wouldn't be too worried about one particular red candle after 5 aggressive weeks upwards. It's like that meme of the guy underwater and his face is popping out and it's like -9%, but underwater is like plus 1,000%, right? People start to panic anytime they see any sort of pullback, even when they're up a significant amount of money. I think it's just human nature. We don't like to lose unrealized gains, but part of the game is sometimes, forfeiting that little bit as an insurance to potentially hold your position to make more. I always like to say confirmation is the insurance you pay to be right. And that kind of applies on the inverse as well. Sometimes by losing a little bit unrealized profit, you're able to make more money, provided that is an active decision and a well-informed decision and not just based on a whim or a gamble or a hope the price action will continue in your direction after this pullback. So if you have a plan and you're aware of the plan and you're making decisions from an informed position, then foregoing some little bit of profit to hold through these corrections, particularly in what is expected to be an altcoin season, historically has proven to be a good decision, so may also be a good decision this time around. You have to take that with a grain of salt, take it at your own. Everyone's positions are different. Everyone entered at different times. Of course, depending on your entry price will massively determine how impacted you were by this correction. Some people not impacted at all. Some people massively impacted. So it does depend on your entry. It also depends on your coin selection, your portfolio diversification. More diversified, the less you're going to be impacted by these pullbacks. Less diversified, potentially you're all in one coin that goes down 40% and then you're wrecked. So you have to think about that as well. But anyway, guys, I'm going to leave it over there. Thank you for tuning in. Have a fantastic day. We'll catch you guys on Sunday for the next video. See you then.